Welcome to Stay in Touch, the podcast that unpacks the complexities of financial plannings and programs. Join us as we explore the options available to you to have a better financial future. I'm your host, Mariana Villareal, and each week I'll have an expert in the field that is going to give you information and knowledge to help you plan the best future that you can. Whether you're a small business owner, head of household, or just a little bit curious, Stay in Touch is here to empower and educate our listeners by debunking some myths, some misinformation, and we will cover a wide range of information for you to have a better plan for your future. So sit back, relax, and enjoy the show. Welcome to another episode of Staying in Touch. I'm your host, Mariana Villareal, and today we have another special guest. This is Mitzi Alvarez. She is one of our newest InTouch members. She works at the office with her as an account with us as an account executive. But I asked her to come here because she has a very interesting background. On top of being a life and health insurance agent, she's actually a real estate agent. And she's been in the industry for quite a bit now. About how many years?
So I actually started 10 years ago, but I started more with like commercial, like property management. So there's a lot of moving parts with real estate. It's not just sales of homes and buying homes. There's also property management. So that's kind of what I started with. And I started doing it with commercial. Didn't really like commercial. So I kind of started doing property management, residential, and then eventually moved on to the selling and buying of homes part. So that's kind of what I do now more.
Yeah. I mean, I didn't even know that part of real estate existed because when you think of, oh, I'm a real estate agent, you immediately like, oh, help me buy a house or, you know, show me some properties. I want to do all that. And I think things like that also get a little bit confusing for people when you tell them, oh, I'm a life and health agent. They don't know that with health insurance, you could do, you know, Medicaid under 18. You can do 18 to 65 through either private insurance, group insurance, Obamacare insurance. And then you also have 65 and older where you could do, you know, still continue through Obamacare if you don't qualify for Medicare or Medicaid. So when I thought about, okay, who needs to be my next guest, I thought about you because you're also now a life and health insurance agent. And through life insurance and being a real estate agent, I feel like you can combine those two because you help them to their, you know, the American goal of owning a home.
Right.
And everybody's like, that is a milestone. Everybody wants to be a homeowner, wants to like create that for themselves, what they had when they were kids and their parents, you know, create that family. And so how do we help protect that milestone and your family? So this is when most people use a life insurance product or maybe not even a life insurance product, and it's called mortgage protection. So can you talk to us a little bit more about how, first, you know, I think everybody wants to know, how do I become a homeowner? Everybody wants to be a homeowner. So let's first give them a little bit of tips on how to be a homeowner and then how can we protect it?
Okay. Yeah, so it's definitely can be a process, right? And a lot of people kind of get a little stressed out about it because they're like, oh, it's too much. But I mean, it's not. As long as you have like really prepare yourself and dedicate yourself to, you know, really wanting to reach that goal, it's possible. I mean, it's like everything. The main thing is going to be obviously your credit score. The minimum credit score that you may be able to work with is like a 580. If you're a VA, they're more lenient sometimes with VAs. So you know, it's good if you are a VA, you have that benefit, 0% down sometimes with VAs too. But if you're not, you know, it's still doable. You just have to try to get your credit score best as you can, minimum 580. But of course, the higher you get it, the better. Being able to show that you have income. So if you can stay at this job for at least 2 years, that would be great. What else are they going to look at? So they're going to look at your bank statements and obviously your down payment. So try to save as much as you can. A lot of people get confused with, oh, well, there's 0% down payment programs, which there might be some. There's assistance programs for down payment, but that's not the only cost that goes into purchasing a home. There's also closing costs. And some people think that because they're getting 0% down, that you don't need any money to bring to the table, which is false. You may still need some type of money for your closing cost. So I would just say it's better to have, the more money you can save up, the better, just to have it on the safe side. But that's mainly what they're going to be looking at, like your credit score, your debt to income ratio. So just try not to have too much of a high debt. We try to look maybe like less than 50%, which is what most of the time they do.
Yeah, because what about the people that are 1099 employees? So they don't have like a W-2 to show.
Right. So they're going to look at their tax returns. So I think that's a very good question, actually. Good thing you brought that up, because a lot of people, and I think in our culture, they get paid 1099, and even me as a real estate agent and everything. But, and it's hard sometimes because when you file your taxes, you put a lot of deductibles on your taxes because nobody wants to pay the IRS. So I get it. But it really does affect you when it comes to purchasing a home, because what the lender is going to look at is that you only made, after all these deductions. I have seen people who literally, after all their deductions, it's like $10,000. And it's just like, the bank's going to be like, how are you going to afford a house when you made $10,000 in the whole year? So that's the bad thing about the 1099. But we do have programs right now that would help in that. They do require a higher down payment, so it's 20 to 25% down. So it is a big chunk, but it's doable. Or you can file your taxes the right way. But like I tell people, what would you rather do? Would you rather put more towards your house, or would you rather pay the IRS more?
Yeah, because the down payment still go towards the mortgage, doesn't it?
So it's still benefit, but some people can't, IRS, you have payment plans. You can't really have a payment plan when you need the 20% down to the house. So that's the only downfall for it. But it is possible. I mean, I've seen it. Like, I work with a lot of Hispanic people, and a lot of them do get paid 1099, and it's not impossible. I mean, I see it happen a lot, actually. So
yeah. So, there's probably some 1099 listeners right now, and they didn't know that there are some programs like that. So
even with tax ID. So you can purchase with tax ID if you don't have a social. So
there's like different programs for that too.
Right. It's the same thing. Higher down payment. I mean, the bank is taking a risk in a sense to lending you money. But mostly too, if you don't have your taxes, they're taking a risk, and that's why they require more down payment. But it's not impossible. There is programs.
Yeah. So right now, everybody is a little bit scared about the housing market. Because
everybody thinks the market's going to crash.
They do. Are we expecting one, or what are you seeing?
I do not see it crashing. I mean, there's been like so many, like experts that just dedicate themselves to trying to predict the market. Of course, we're not fortune tellers. Anything can happen. But time and time again, it always comes back like, no, the market's not expected to crash, at least for the next 5 years. So, I mean, if you're waiting for the market to crash to buy a home, then you might have to wait longer than 5 years. I don't know if after 5 years it might, who knows, but right now they're not expecting it to crash, at least in the next 5 years. So
okay, so just save up for it.
Yeah, just save up. I mean, it's better. I mean, even during COVID, people sell their houses and they got so much money out of it. Like, the profit was crazy for some people. I mean, kid you not, this lady bought this house. We sold it. She netted $300K. After paying whatever she had to pay, she netted $300K. And it was an investment property for her, so that was great for her. She's like, this is my retirement money. Exactly. I was like, nice. Yeah. Nice.
That's what we all want, play the Monopoly game of getting homes, renting them out, sell them at the right time. I think another worry about homeowners is maybe they bought a house too high. Then, let's say that the houses do come down, and now you're basically paying a $500,000 home where it should be valued at maybe $300,000. And so what would you recommend to those homeowners where they feel like, should I sell it and, just take my loss, even though Or can they sell it for the same price?
Yeah, I think usually it doesn't. Like, I mean, we haven't seen the last market crash that was really bad was in 2008. So that's when the houses kind of like lost their value in a sense. But at the same time, depending on when you bought it, it might not go that low to where you're not going to profit anything. So it's super rare that you're not profiting anything on a home. I mean, the most I think I see it is maybe if it's like a wrong investment. Like if somebody bought the house, they put too much money into it. And then when they're trying to sell it, it's not where it needs to be. But usually when they do that, it's like within the same year. So, it takes time for the house to get more value. So, I mean, and I'm not going to lie, during COVID, a lot of people from California, New York were coming here, investors. I mean, the market was crazy during that time. And now those people, if they try to sell now, it's kind of like not too convenient for some of them just because they overbid a lot on the homes. So they just have to kind of wait it out though. They might be like $30,000 or something. So they may just have to wait it out like a few more years and then they'll get it. But there is some that bought it right before COVID and they made a good profit selling it now.
Yeah. So, I mean, we live in the state of Georgia, so everybody's moving here. And for sure. Our houses are going crazy. And, homeowner insurance are going up. Everything is going up. And so, like, the houses that maybe when we first bought, like, for example, mine, I bought it so cheap. And compared to what it is now, I'm like, do I sell it? Do I not sell it?
Yeah. I mean, it depends what you want, though, too, because, I mean, it's like, are you going to be downgrading to something smaller where the mortgage is going to be cheaper per month? If that's what you want, then it might be beneficial, But if you're, just selling to
buy another one.
Yeah, to the same. Buy another one. Mostly interest rates right now are kind of high compared to what they were.
Yeah.
So, I mean, this is what they call stable, but we got so used to those good interest rates that now people are like, oh my God, the interest rates are high. But they're okay. They're not. I mean,
you can always refinance, no?
Once the interest rates go down.
You can refinance as long as you don't have. So I think some people get a little bit confused about FHA and
the different type of mortgages.
So can you tell them a little bit about those? Yeah.
So there is different types of loans. So, for example, like I was talking about VA earlier. So VAs usually have like their own type of loan. It's just called a VA loan. So then we have the FHA, which FHA is mainly like for first-time home buyers. They have like different little requirements. So like FHA, you can work with the 580 credit score, but like the conventional loan, which is a different type of loan, that one you do need a higher credit score in order to work with. And they require like a more down payment and stuff like that. So there is like a little bit of differences in it. And there's not that there's one better than the other one. Like some people think like, oh no, this is better than, conventional is better than FHA or vice versa. But it's not that one is better than the other one. It's really what's going to be the best option for you in specific situations. You know what I mean? So, I mean, FHA, because it's like lower down payment and it's kind of like government protected, it's more common for first time home buyers. Okay. So that's kind of like the one that first time home buyers usually get unless they have a better credit score and they're going to be putting more down. So.
Gotcha. That's kind of. I do know right now also another trend is flipping homes.
Oh yeah, I myself want to do that. Like, it's just it's going back to the same thing, but making the money, right? And it's fast money, but a good chunk fast.
Yeah.
Even though it's not really that fast, but it's nice.
So, some people are blaming investors for them to, especially like millennials, they're like, why are there all these investors buying our homes and then selling them for double because they're flipping it?
Right.
So, how would you what would you recommend to a home owner? Should they buy new or should they buy old to renovate for somebody?
It goes back to your situation. For example, if you're only qualified, if you're only pre-approved for something on the little lower end, let's say like 320, then you may have to buy a house that you're going to have to. Yeah. And it's not going to maybe be like completely fixer-upper because going back to the loans, I mean, FHA, for example, they will not lend you money if the house is not habitable. So like you cannot buy a house with the FHA loan that's like, doesn't have HVAC system or like it's completely gutted. You would not be able, they'll be like, no, we're not lending you the money for that. You have to be able to live in it. So if you only qualify for a certain amount, then maybe you just have to upgrade it within time. So I always tell my clients, like, you need to pick your battle. Because some people too, I'm like, well, what monthly do you want? Like, what monthly payment would you want to stick with? Because I think that's very important as well. What's the point of you getting qualified for a $600K house, but you don't want to pay a mortgage of $3,500? You know what I mean? So like, you might be in your head, like, I only want to pay $2,500. So we have to go lower on the house, right?
Right.
So if the house, I don't know, the thing is old, the kitchen is outdated, brown cabinets, like the whole house has like brown, you know what I mean? Like, you're going to have to put some money into it. And it's kind of like, we'll pick your battle. Like, you want a mortgage that's more lower end, or you don't mind the mortgage higher end, because the new construction houses are mainly $400K, depending on the area, of course. But I mean, let's say where we live is pretty hot. So you're not going to find nothing for $300K new construction, right?
Yeah, definitely.
So it just kind of depends on the area you want and what you're willing to do, like what you prefer yourself. Of course, if you got it and you want it, then go for it.
Yeah. No, and then, so once you buy the house, everything's good to go. This is when you start to recommend your clients mortgage protection. So before you started with, life insurance and health insurance, what are some why would you recommend mortgage protection to your clients?
What's super important? I mean, I'll give you an example. I had a client, I sold a house to a client that she stay-at-home mom. She was pregnant, so they're gonna have, I think, 4 kids, and he's the sole provider, right? And she was like, cut down put 15 years instead of 30. And I was like, well, it's going to double your monthly payment. So why don't you just let it be? And if you got extra money that month, go ahead and pay more towards your house. Because what if something happens to your husband? He's the sole provider. He's the moneymaker. You stay at home with the kids, which is great. But if something happens to him, who's going to pay your mortgage, right? Mm-hmm. And that's kind of when it comes in, because it's super important, right? Like, if something were to happen to her husband and they have no type of protection, what's going to happen to their house?
Right.
Like, how is she going to be able to go from that and be able to make the same money as he was making, what they're affording on a monthly basis, plus the kids? Because now she's probably going to have to hire someone to take care of her kids, right? How is she going to pay her mortgage?
Yeah.
What would she do?
Exactly. So then mortgage protection now seems more of like an investment,
right? To
make sure that
your other investment stays good too, to keep your other investments safe.
Exactly. So with mortgage protection, like traditional ones through banks, let's say,
right,
those can get very, very expensive. But if you put them in a chart, because year one, you're protecting $400,000, your monthly payment is going to be very high. And if something were to happen to you, a disability, death, or anything like that, this kicks in and pays your mortgage. Cool. Mm-hmm. That's protected. But as the years go, from what I understand, the value of the mortgage protection goes down, and so does your monthly premium. Right. So
yeah, basically the benefit goes down because they would only pay whatever is on the loan of the house.
Okay, so the mortgage protection's value decreases as what you owe decreases.
And it is more of a protection maybe for the lenders in a sense, because they're basically paying the lenders. So your family members or, you won't see that money. Okay. I mean, the house will be paid off, which is great. But if, because of the time, you start paying your house off, then it does start the benefit starts getting smaller, you could say.
Okay.
So they won't give you anything extra.
Right. So you'll just pay whatever you have to pay for your
like
mortgage.
if your balance is $200K on the house, they'll just pay that to the lender, the bank, wherever you're getting your loan from.
So when it comes to using maybe a life insurance 30-year term policy, what are the benefits to that one instead of just going with a traditional mortgage protection through a bank?
Well, that one, the benefit, even if you owe only $200 on, there's different types, right? But if you do the one like for your mortgage specifically, where you get that money, you get the benefit money, right? So it doesn't matter how much you owe your mortgage. You get, the family member gets that money. Okay. So they could do
way more with it.
Way more, right.
Yeah. So for example, like with mortgage protection, it starts at $400, but it decreases. With a life insurance policy, it stays at $400 throughout for the whole 30 years. So let's say, you know, your mortgage is now at $200. Now you have those extra $200,000 to go towards, I mean, hopefully it wasn't a death, maybe.
Right.
Because I believe mortgage protections, well, you have to, the more you add on to it, the more expensive it is.
Yeah, of course.
So like if you want to add death or a disability or things like that, then the price rises. But with life insurance, it's all included.
And I think that's what people don't understand with life insurance, because me personally, before I started getting into it more, you always think life insurance is just for when you die, to pay your funeral expenses. But I was literally talking to my friend. I was like, life insurance is so important, because if something does happen to you, like tomorrow, and you're not able to work and you're like the sole provider, even if you're not the sole provider, like say you and your partner both work, but now you're cutting that money in half if something happens to one of the partners, right? So regardless if you're sole provider, you're not sole provider, something happens to you, then the money is not the same. But you have life insurance, you can use it, whether, like you're saying, like if it's disability, then you can, you know, it has living benefits. So it's not just death benefits.
Yeah. And I think most people are scared of it. And I mean, the Hispanic community, we believe that life insurance is bad luck. You want me to die? Is that why you want me to get life insurance? No, it's actually because I love you. And I want you to, you know, God forbid something happens and you're disabled or you're very sick and you can't work. There's income coming in.
Right.
As to, you know, just living life and living off of your savings. Most people can't even live past 3 months.
Oh, for sure.
Because they don't have that many savings, especially.
Yeah. And then right now with inflation and everything else, I mean, it's hard. It's hard to save a good amount of money for you to, and then you don't know, like you said, you really don't know like what's going to happen tomorrow, in a week, 2 months. So, you know, if something does happen to you and you only have $15,000, $10,000 saved and you can't work for, I don't know, a year. Yeah. Then like, what are you going to do? I mean, them bills don't stop.
Yeah, no. And I've seen a lot of people lose their homes because of an illness. Oh, and so having, you know, mortgage protection would just give you that amount for what you owe. But a life insurance policy, you can add way more to it. And if your home is $400,000, you're like, you know what? Let me get one for $700,000, $800,000 for 30 years. So I know that in the next 30 years, my home's going to be protected, but so is my family. And now there's income for both. So.
Right. And I think that's the key that you said right there, my family, because that's what you want to protect, your family. I mean, the house is one thing for sure, you know, of course, but, and yes, it can be a great benefit it's a great benefit for your family. But if you can do more with it for your family, then why would you not want to do that?
Yeah. And like, what's the age range right now that you're seeing buying homes?
Oh my God, it's crazy you asked that, because you would think that like our generation right now is like the majority that's buying homes. And they were at one point, like statistically, like they were. But me personally, for whatever reason, I've been working with more, not older, but I would say like 40s, like early 40s. And that's what I have gotten recently a lot. But statistically, it has been majority our age group. So like, the 30-year-olds.
Yeah. So if we do the math, if the math is mathing, if the homeowners are 40 years old and they get a 30-year loan,
right?
By the time they're almost done, it's 70. Okay. God forbid another pandemic doesn't happen and you have to call your bank and say, hey, I can't pay for the next 3 months. Give me a chance. So now you're adding more interest and more things.
Right.
So with that being said, 60s to 70, that's when you run the risk of some kind of disability, some kind of illness. I mean, I think people need to reevaluate and check out their family history. I'm not oblivious to my family history. My grandparents, none of them lived past 65. So, I know that in my gene pool, we're not the best looking.
Right. It's not looking too good for you.
Yeah, it's not very good looking. So I need to protect my home to make sure that, by the age of 40 or 50, because that's usually when most of my family members got diagnosed with cancer, I need to make sure that I'm going to be okay and my home's going to be okay and my husband's going to be okay. Everything's going to be good through a life insurance policy. And shoot, I mean, you've seen the prices for a term for 30 years, $800,000, what, $75 a month?
Right.
$75 a month to protect your income and your home.
Right. It's crazy.
It's cheap.
Yeah, that's why I'm
affordable.
It's crazy to me when people don't realize how important and how much of an investment it really is for them as well. Because like you said, a lot of people do think it's no benefit there. They're oh, we're just paying for no reason. There's no benefit, so, but they don't, I think it's because they don't have the knowledge of it. Nobody has taken the time to really explain to them what the benefit would be and how the cost, if you really want to talk about cost, compare the cost to how much it's going to cost your family or cost you if you do become disabled or something. How much is it going to cost you to try to figure everything out?
Yeah. And I think most people don't understand that once something happens to you and you're sick, it's really hard for them to recover because now they have the stress of income. Shoot,
yes,
can't work. Now I can't really focus on myself to get better, to take that time off of work and really invest into my health. I have to go back and make money because unfortunately, we live in the United States where it's go, go, go. You have to work in order to sustain some kind of comfort. And even then, most Americans are drowning in debt. So it's either you file for bankruptcy or you got to go back to work and figure it out how you can heal yourself from whatever you got diagnosed with at the same time still providing for your family. So who would you recommend on top of just using mortgage protection, a term life insurance policy? Would you recommend it to just the sole provider of it, the head of household?
No, everybody. I'm no, it's everybody because even if let me go back to my client again, the same example, her, that she's a stay-at-home mom. If something were to happen to her, it's still going to take some type of distress on her husband. Because let's say she does become disabled. She doesn't die, but she just becomes disabled. She dies is a different story because now he has to figure something out too for his kids, right? Because he's had the wife at home. So she's still, even if she's not making the money, it's still going to take a toll financially to her husband regardless. So, I mean, but if she becomes disabled, it's kind of the same thing. She might need a caregiver. She might need, the kids are definitely going to need a caregiver. So he might need to hire someone to help him with the house. I mean, it's still a lot of work, even if you're not working, you know what I mean? And it's still going to take a toll. So she should definitely have one too. So, I mean, I feel like you can't pick and choose just because you're not the sole provider. You know what I mean? Whether you're not the sole provider or not, even if you're providing a little bit, it's still going to take some type of toll financially to your family. You know what I mean? So it's... Yeah.
I mean, I also tell young people that maybe don't even have a mortgage to protect.
Right.
But let's say you are in your 20s and you happen to be with the wrong group of people, or it might not even be your fault, but you're out at 3 a.m. and somebody, today's world,
just really don't know.
Yeah, you could be driving, minding your own business, but here comes somebody, hits you.
Right.
Now you're back at your parents, and now they have to take care of you. At 20 years old, I've seen quotes of $1 million policies for less than $50 a month. Yeah. And that's going to alleviate so much from your parents, because your parents are probably in their late 50s at this point.
Right.
You know, some of them might be at 60. And now you put the stress of something that unfortunately happened to you onto them. So a term life insurance policy with living benefits, it doesn't just benefit homeowners, doesn't just benefit head of households, it benefits anybody that qualifies for it.
Exactly. And that was like another thing too, because some people, they're like, well, it's just me. Like, it's just me. I don't have kids. I don't have a house. Like, why do I need it? It's like, what do you mean, why do you need it? Like, do you want that stress to be falling on your parents? Because at the end of the day, they're going to be the ones that take on it. I mean, you're not here by yourself. Like, you have some type of family that you want to help with.
Yeah.
So
look out for...
So again, everybody needs it. It's not just, the sole provider or not. It's for everybody.
Yeah, you have to tell them, how much do you love me? They're going to be like, oh, I love you a lot. Oh, yeah? How much is your death benefit? And then they're going to be like, oh, yeah, you don't love me that much. You think $100,000 is going to help us? No. So, yeah. Well, thank you for coming. I know this is a little bit different because, but the correlation between real estate and protecting your, it might be somebody's biggest achievement to be a homeowner, so
for sure.
Let's protect that. Let's protect the family. Let's protect the loved ones. Prepare for the unexpected. Emergencies happen, and if you don't have the funds for it, it takes a toll on your mental health, your physical health, your family. A lot of families break because of an accident, and that's what they are. They're accident.
And
you never plan for
all
them.
The time.
Exactly. Nobody's immune to it. So look into some policies for term. They have annual renewals, which renew every single year. You can do 10 years, 15 years, 20 years. If you have a mortgage, obviously shoot for the 30 years to make sure that you're fully covered for those 30 years. If you have been into your mortgage already 10 years and you're, oh, you know what, let me protect the next 20 years. Do a 30. Give yourself an extra 10 years to make sure that, past your mortgage, if something were to happen to you, you still have that money to replace income, to protect your family, to make sure that, life continues even when you can't. So thank you, Mitzi.
Thank you. Thank you for having me. I was a little nervous at first, but
yeah, no, that chair is really comfortable. Everybody's always like, it's a lot harder over here, because it is. You're like, what do I ask? But thank you for taking the time and explaining to us a little bit about real estate and how you can protect your biggest purchase. But everybody's biggest purchase. Your home. Protect your home. If you have any questions, feel free to reach out to us. Our emails will be at the bottom of the screen. Send us an email with a little bit of what you're looking for, and we will be reaching out to make sure that you have the protection that you need. Thanks again, and we'll see you on the next episode. Bye.